You're in the network marketing space.
In MLM, everything is a lie.
It's 100% predatory. It's meant to just part you with your money.
What type of lawyer are you? Your son's not going to college? Your son's doing that pyramid thing, huh? Hey, I drive the Lamborghini. Don't you let nobody steal your dream!
How did you meet Patrick Bet-David?
He's a once-in-a-generation leader. Forget CEO, leader. Listen, bro, I just filed bankruptcy. You don't want a guy like me on your team. And then Patrick connected me he sent me a DM to be directly recruited and trained by him.
IUL versus whole life. Why do you prefer IUL?
For me, I like the upside potential of an IUL, even though some years you can get a 0 or maybe even a 1.
How many policies do you see structured
Oh
properly?
my gosh, it's sad. The whole Kyle Busch incident, I read the whole complaint. When you actually read the document, it wasn't set up for retirement planning supplement. It was set up in an IUL, an irrevocable life insurance trust, which is used for...
Matt,
hey,
welcome to the BetterWealth Show.
I'm honored to be here. Thanks for coming out.
We're in Nashville, Tennessee at the Gaylord.
Yes.
You got 2,000 people at your event.
Yep.
I feel like you're a freaking celebrity.
Oh,
I know that you're walking. You're a Bears fan with a Green Bay Packers
Praise
shirt.
God for the Bears. I know Packer fan here, but we're gonna have an interesting conversation.
I feel like either teams aren't going to age well. I hope I'm wrong, but that's what I'd say about
we
that.
have 2 young quarterbacks. I think they're going to face each other for another 6 to 10 years.
It's going to be a tough division. It's going to be fun.
Yeah.
What I would love to cover is obviously you are partners with Patrick Bet-David.
Yes.
And so I've been indirectly following you for many years. It's been fun to see you guys grow and build, and you guys
Awesome.
are inspiring so many people.
Thank you.
Our channel loves talking about insurance. We're probably one of the only channels on YouTube that when we do an insurance video, we have better views than other videos, which is wild.
That's awesome.
So I want to talk about your philosophy there. I would love to talk about whole life versus IUL. I'd love to get your take on infinite banking and also some of the crazy news of lawsuits going on and just in your take on that.
Yeah.
Before we jump in, would love to hear your 90-second overview of like why you're such a fan of life insurance, because if you go onto TikTok or Instagram, it's not the cool thing. Like I always told people with your charisma, with my charisma, we could make money a lot of different ways. Why in the world did we pick insurance?
Yeah. It's funny. A guy just sent me a DM and says, I see what you're doing in the insurance space. You come on board with my tech company. Well, the insurance space, as long as this country has been around, insurance has been here. I mean, you go back to 1759, the first Presbyterian church sent its pastors over to establish the Presbyterians Ministers Fund and establish life insurance as a way to transport goods and services. And at that time, people over here. And so life insurance is an old, wealthy, rich industry. And I think if you're going to establish a career, you're going to establish a business. Listen, I don't come from money, but when you want to establish something that, regardless if it's a Democrat or Republican in the White House, if it's tariffs or no tariffs, if it's China or Russia or Israel, it doesn't matter what's going on in the economy, insurance is always going to be there. And that further edified my decision in doing that, because when I built my business in the first 10 years, it was during the Great Recession. And so I saw my career in 01, a dot-com bubble, and my career 07, 08, 09 explode during tough times.
Yep.
And I saw that I was a umbrella. There are many people, storms and rainy days, and I saw the financial literacy piece being explained. I saw in the boardroom clients' eyes go like this. Like, I never thought this is the way money worked. I never saw life insurance. I never saw annuities. I never saw retirement planning this way, and that's the passion behind it, man.
So what's your story? I know that you serve our country.
Yes.
Thank you. Like, how did you how did you meet Patrick Bet-David? How did you learn about insurance? Like, give me a little bit of your overview.
Yeah, so 8 years in the Marines was my 7th year in, and I was going through a divorce, went through a bankruptcy, and which is a no-no in the military because that affects your morale. Yeah. And if you share your financial problems, you can actually get written up.
Interesting.
And so I filed bankruptcy, marriage, and single father, and I was part of the 15 Marine Expedition Unit, Special Operations Capable Unit. And they say, hey, Sapaula, we can't use you. You're a deployable Marine, but you can't use single fathers at this unit. We can't worry about your kids. If we've got to send you, we got to send you. So you got to find something else to do in the Marine Corps, back in the rear with the gear, or we just can't re-enlist you. Because my 8th year, I was about to re-enlist again. I said, I really have a hard time because what do I do? I came here, and when I was 17 years old, turned 18 years old in boot camp. What do I do? I'm be a cop, firefighter, postal worker, what? And so I got prospected by a retired master sergeant in Southern California. He said, hey, Sapaula, you like money?
Think about it. Yes.
You like a lot of money? Second question. I said, let me show you the rules of the money game. He kicked the gate open, kicked the door down for me. And I thought the whole irony was, listen, bro, I just filed bankruptcy. You don't want a guy like me on your team. I'm the worst with money. Look, it's moments like that. Your pain becomes your fuel. Your pain becomes your passion. Pain becomes your purpose. you're gonna be doing well. Now self-doubted myself for a good 2-3 years. I self-doubted myself until I got educated in the industry. I got some good mentorship by him. And then I met Patrick Bet-David as my 12th, 13th year in the business.
Wow.
Yeah. Because I was an independent. I was with an FMO, was owned by Allianz. It's called Personalized Brokerage Services. I was a number one insurance agent out of 25,000 agents. I was kicking all these premium finance guys' tail, because I was doing max funded IULs. And some of them were just max funded. Some of them were infinite banking. I sold a lot of term insurance, sold a lot of annuities. So, so I was more of a retirement planning type of category. And then it was my 12th year in the insurance business. I'm like, yo, bro, I'm kind of burnt out here, man. Like if I don't sell something and I got this overhead, this staff, this office space, my house, my kids, single dad, if I don't sell something, I have a bad week. And that next 30 days, 60 days after that, I had 2 back-to-back seminars because that's how I built my business, seminar marketing.
It's tough. Yeah.
And I'd spent $12,000 in seminar marketing, 0 sales. I'm like, bro, I'm having, and then my morale I was just out of 12 years doing it. I look back at my career, I was like, do I want to do this for another 12? Until my sister, Sis Kuya, which means older brother in Filipino, he didn't meet my boss. So I flew out to LA. He's a pastor of this mega church. He said, hey, you remind me of a Iranian version of you. Patrick Bet-David.
Oh, there you go. Yeah, yes.
And then tells Patrick, hey, I met a Filipino version of you. And then Patrick connected me he sent me a DM. And I can say I got DM by PBD to be directly recruited and trained by him. And working together with him, Caleb, I mean, he's a once in a generation leader. Yeah. Forget CEO, leader. Once in a generation leader. And he's wise beyond his years. I met him when he was in his late 30s. And to see what he did, because the whole negotiation, to see AIG and all these different carriers cancel the contracts on PHP, to see the whole story and see what Patrick did to rescue and negotiate those type of things as a 30-year-old CEO at the time. Phenomenal. God's got a special hand and special anointing on his life, and when you have a chance to be around people like that, maximize it.
What about insurance? I know that you got into it because it was a great way to make money, but was there like an aha moment? You're like, oh, I kind of feel like it's the most misunderstood asset, but when you understand it, the more that you understand it, becomes one of the most valuable assets that you can own.
I'm glad you just said that, because people don't look at it as an asset.
No,
they think it's something that only gets paid out when you die. But you're right. I think for years, decades now, life insurance has been banging outside the doors. Hey, asset class, can you let me in? I'm an asset class. Tell me what happens to a family when they have a $1 million death benefit versus a $1 million piece of real estate. It's an asset. And when people have this asset, according to 101A, this income tax-free benefit that comes our way, and now with living benefits, oh my gosh, that's a whole other conversation. That's a conversation starter. My own parents are benefactors of living benefits. I put my parents in a retirement community, not a retirement home. By Medicaid, a retirement community with 8 activities to do every day. To see my own parents, the planning we did when I first got started, because they were for my first clients, right? For my first clients, and then we got them a CNA long-term care policy and an IUL and a whole life policy with benefits we can access in IUL living benefits that we can access if they were to be in that situation. And now they are. And my father, 85 years old, early stages of dementia. My mother, strong as she can be at 80 years old, and she's here. She loves.
That's amazing.
My second book, I wrote Gotcha about my favorite client. So all these products and services, I tax advantages, guaranteed income, long-term care, all stuff. It's manifested through my own folks.
Yep.
And so there's nothing anybody can tell me that life insurance isn't good for anybody out there in America that wants to protect and take care of the people that they love and care about.
What would you say to someone who says it's a terrible investment?
Yeah, well, this is where because I was first Series 6 licensed, right? And so I had a Series 6 license, Series 63, Series 26. Life insurance to me is a capital preservation tool. It's not for me. It's not a particular straight up investment, but you'll find different people that call it an investment. I
appreciate you saying that, because I think sometimes, and I'll share why in a second. Sometimes we get ourselves in trouble when we talk about it as an investment, when it's like, no, we don't need to stoop that low.
No,
it's not. And in fact, you can't lose money on some of these contracts and investments. Show me an investment that it's guaranteed not to lose money.
Sure. Yeah. And to me, insurance is concrete. The foundation before you build any property, you lay down solid financial with concrete, with cement. What about your financial home? Yep. Your financial home's concrete not an investment, is insurance, risk management, capital preservation. Because when the big bad wolf comes blown by, and life's big bad wolves will come blown by many, many, many times, how strong are your roots?
Right.
How strong is your foundation? That's what life insurance does.
For the last 6 years, we've made over 1,000 videos to change the narrative around money and life insurance and help our viewers live a wealthier, more intentional life. But my producer just told me something wild. 94% of you who subscribe to our channel haven't turned on the notifications. That means only 6% of you actually get told when we drop a new video. So whether you're brand new or one of our longtime subscribers, if any of our 1,000+ videos have helped you think differently or brought you value in any way, I'd love for you to hit that bell and turn on all notifications. We've got some incredible guests and conversations planned for 2026, and I don't want you to miss them. Thank you so much for supporting this channel, and I'm excited to keep growing with you. Yeah, wanna run an analogy by you. So everyone in your audience, I would bet, has a smartphone.
Oh, for sure.
Is your smartphone an investment?
Isn't it smart an investment? For me, it is.
Okay.
Because it makes me more money. Et cetera,
when was the last time you looked at a statement on your phone?
That's right.
Is it get 8%, 12%?
Yeah.
The reason
screen statement. Right?
Yeah. The reason I mention that is your phone. It gives your ability to do multiple jobs. I would agree with you. It's one of the most valuable things you can own. It's your alarm clock. It's your GPS. You can call. You can text. Like you can do so many jobs. Get this, so many jobs with your phone, and yet I wouldn't necessarily say that it meets the investment criteria, but it would be like the most important thing that I could build a 7-figure business off of a smartphone. Yeah. I very much think the same thing. Like the more jobs you learn about insurance, the more valuable it gets. When I first got into the space, I wrote this book called The And Asset. You can use your money while it continues to grow. And that was like, for me, I was like that the idea that I can have money grow for the rest of my life and I can utilize that capital was like, I can have $1 do 2 jobs rather than 1. Yeah. And then
I like that.
Or 3. Or 3 or 4. Yeah. And now I'm realizing that it's like actually life insurance does like 15 or 16 or 17 jobs. And if we don't understand them, we don't value them. Yeah. But if you understand them, now it's like, how do you quantify the value of safety or credit protection?
It's so funny that you said that because, obviously we recruit a lot of agents, and one of the people that came into our office one evening was a lady who worked for AT&T. She sells AT&T cell phones, so she left for a different career. I said before I upgrade to what's the newest one, 17?
Yeah, 17.
Is it 17?
Maybe, I don't know.
I asked her a question. How much of our phones do we not use and yet we still upgrade? And she let me see her phone. See, she opens up a screen. I don't even know where to look at. See, you haven't even done this yet. You haven't even done this yet. Oh my gosh. And it opened up to a whole nother level of usage in the cell phone that I don't allow people think that life insurance can do those things.
And I think the more we can educate people on the jobs that life insurance does, then we look at this more as, some people use this as a pocket knife analogy, but it just elevates the asset class and elevates the tool. And it's interesting. The more I learn, the less salesy I get or hypey I get, but the more convicted I get. Sure. Because you just mentioned that your parents are using the living benefits. Yeah. I know someone whose their dad is still alive because of the living benefits. He got terminally, death sentence kind of deal, got alternative medicine with his life insurance and is alive to this day because of that. And so it's like, no, did life insurance keep him alive? No, it was, he went out and got it, but it definitely funded those avenues. Sure. And so when you hear that, it's hard to, the more conviction you get.
We by the way, we have dozens of clients that are here right now at our conference. They have become agents either part-time, deciding if they want to do this full-time or not. And one of them is named Tasha. Tasha found out she had typhoid cancer. So she took that living benefit, stopped her job, went to Tampa, found the best cancer center on the beach to have this holistic medicine. And the best investment, 90 days later, cancer-free, she's good to go because she didn't have the stress of having to clock in on Monday morning. She had the stress of bills, stress of taking the kids out of school, had the stress of this and this and that. She can have peace. And I think that's what a lot of people lack today is they don't lack peace. And because they don't have peace, stress is on their life. And when stress is on your body, that when stress is on your body acts. You may not think it's bad because, people had kidney health. And there's so many more people today in the 30s, I've found and discovered through my own client work, they're suffering strokes in their 30s and 40s. The guy that built my website for my book, Dustin, I put him in my book. He had a stroke at 37, 38 years old, 18 months after getting an insurance policy because he's building he's built my website, right? And he's watching my videos. He's listening to read my content, listen to my podcast. He's like, bro, I need to be your customer. So he comes to the office, $80 a month, $70, $80, something affordable, something suitable, right? 18 months later has a stroke. Multiple six-figure checks get sent in by the insurance, by the IUL. Was it an IUL or a term policy, one of those. And anyway, multiple six figures from a guy that's from Trinidad and Tobago, where from a wife in the south side of Chicago, and nobody ever explained to them what life insurance was all about. And today, they're now here at our conference learning more about how to expand their business and expand their awareness.
I love it. Before we dive into the juicy topics of insurance, I want to take a step back and get your money framework.
Okay.
I love learning about how people think about how they make money, how they keep money, how they grow money. Like, how do you think about the wealth framework? If someone was to come down and say, help me understand how you think about wealth, tell me.
The first thing, because I don't come from wealth, so I had to create wealth. I believe that every generation will have that one that decides to make that decision to change that family's bloodline forever. It just happened to be on me. And by the way, I just found out at Christmas that my bloodline was changed because my mother was born in 1945 during World War II, and because the Japanese invaded the Philippines, I found out during Christmas that my mother was born in a foxhole. And my grandfather was a POW by the Japanese, and he escaped and found his wife, and his baby, my mother, in a foxhole. And so they made a big decision to change my life. Think about how much my life would have changed had he not made sure he protected his wife, who was about to give birth. And while he was a POW, to escape the camp to find his wife at a predetermined spot. In some of that way, what was that? It's a form of insurance. It's pre-planning. When the worst case scenario comes in. And so today, I have that charge because I'm born in America. I could have been born in a dirt floor in the Philippines. But to me, first thing about wealth, I'm just grateful for where I'm at today, man. I'm grateful to be in America. I'm grateful to be alive. I'm grateful that all the stuff I've been through the military, through the Marine Corps, and all my buddies, sadly, committing veteran suicide or didn't come back from overseas. I'm here today. In fact, in one of my deployments, I cut my fingers open, cleaning up a coffee pot. I go to the hospital and go find out that I'm reporting to the wife of one of my crew chiefs. And she goes, "Hey, did you hear what happened to Captain Duckworth?" "Well, what happened?" "She just got shot down in Iraq." That was my unit. I could have been deployed on that unit. And here I am at home. And that was my point, saying, okay, Lord, you spared me from that battle. You spared me because I did 3 deployments. I was about to go on my 4th. And I chose my family. I chose to stay home. I chose to leave the military. I got spared. So first form of wealth building and creation, I'm just grateful, man. And I think it starts because inside that word gratitude is the word attitude. And the second thing about this, if I'm really grateful, I have to protect. I have to make sure I maintain control. And when the worst case scenario happens, I have to maintain control, leave everything else up to God. But systems and process of how I maintain that control, it's up to me. And the other part of that wealth building is stewardship, because none of this stuff is mine. This business ain't mine. This house that I live in is mine. The relationship I have is mine. But how do I steward these relationships? And I look at that stewardship responsibility under Matthew 25, when the master was giving his 3 different servants different bags of money, talents. And a lot of people skip over this part. He was giving them money because he gave one to 1, the other one 2, 4 and 5, right? It says, here's your money. I'm going to go on a journey. And I'll come back and see what you do with it. But he gave this money. There's a scripture people leave out, according to their ability. And the one he gave one had the least ability, second, and the third one the most. And what the one do with it, the least ability, because he had the least ability, that's right. He buried it out of fear. And so I have 1 or 2 choices to ask myself in every given day. Am I operating in a spirit of fear, or am I operating in a spirit of faith? Because faith, like savings and investments, is an emotion of faith. That this savings and investments, this insurance, I hope this insurance company is going to give the promises we contractually signed up for. I hope that my debt-free payment plan is going to be snowballed out of debt. I hope that my savings and investments grow so I can retire one day. It's all an expression of faith. And sometimes when people don't have that faith, and that people kick in fear, and that's why people spend everything they have.
Okay, so I'm hearing gratitude, I'm hearing perspective, I'm hearing protection, control,
systems.
Systems. Is it just one of those, like, you have a framework, or is it one of those, like, these are just things that I want to have in a plan?
I would say my framework in terms of it's I'm more of a the values and principles. That's my framework, and then I find what specific logical element at that point, at that time, fits those values and principles.
I saw a video that you did recently about paying off your home.
Yeah.
You're not a fan
I'm
of,
not a fan.
of pay. You know, we're in Dave Ramsey's backyard right now.
Oh, that's right. I totally forgot about that.
You forgot to ask him to come speak to your event.
Next time around, we got to ask him to come speak.
Dave, come. I have a funny story about Dave Ramsey that I'll share after.
Sure.
So how did you come to you had, I believe it was like 10 reasons why
Very easy. Great Recession, 07, 08, 09. Why do I want to pay off my house? The conversation, right? Versus in being debt free, or being the house being paid off, or the house being paid for. So I choose to have my house paid for, because I saw this with my own eyes during the 01.com bubble, 07, 08, 09. I saw people with the most amount of equity inside the house, diligently paying off the house sooner, lose control, back to back to my framework, my values and principles perhaps framework, and they lost control. And then everything that the down payment, the years of double downing on a mortgage, they lost because of a layoff. And then now, or worse, my friends in New Orleans, my friends in Hurricane Harvey in Houston, Hurricane Maria, Puerto Rico, the fires in LA. They wish they had $50,000 of equity, liquidity in cash versus $50,000 of equity. So that is a historical thing. So I see my things not through somebody's textbook and theory. Yeah. There's 3 different ways people grows, right? Or through ways people learn. The first one is theory. I can learn about it. I can learn a theory from it. I can read the Bible. I can learn from a classroom. I learned the theory, but I haven't done it yet. Right. The second way I can learn something is through witnessing. Right, like the disciples that watched Jesus do, walk on water and do all the miracles, right? But they didn't know how to do it themselves. And the third way is application, by actually doing it. But you don't know the theory, you haven't witnessed it yet. But imagine if you can do all 3. Right. That's what experience and aligning yourself with a mentor does.
There's a common phrase. Our good friend Garrett Gunnarsson,
GG,
he's often says this, that you are your greatest asset. The number one investment you can make is in yourself. A lot of people devalue themselves. They diversify way too early, and they're playing it safe.
That's my guy.
If someone comes to you and says, okay, I want to make a move, or want to leave my job, or want to do this next thing, do you have a framework or questions that you walk through? Because you don't want someone to just lose everything to chase maybe a dream that wasn't thought through, but we're all going to die. And I do not want to regret my life. And I find that a lot of people live life, we would live it differently if they thought the regret framework around not regretting.
I think there's smart ways to be aggressive, because when I first left the military to begin my career in the insurance business, I had 3 jobs. I was a Jiffy Lube hood tech. I was a Olive Garden server. And in the morning, from 5 to 8 o'clock in the morning, I was a YMCA lifeguard. Not because anybody was swimming, because that's the time, for 3 hours I can read.
There you go.
Right?
bad lifeguard right here. Hey, if you're doing laps, if you're gonna die doing laps, evolution kick in.
I think if you're swimming between 5 and 8 o'clock in the morning, there's an intention behind it, and you kind of know how to swim anyway, right? And you're working out, and but when you're looking at the evolution of, do I just cut everything loose and get in 100%? It is kind of risky, especially me being a single father, 3 kids. I mean, I wasn't allowed that risk because I had mouths to feed. So I just made comments, said, listen, if I haven't sold insurance this week, I better clock in, clock out, and really figure out whether I can really be good in the insurance business. It took me 2 to 3 years to figure that out. But as soon as I started making 2, 3, 4, 5,000 a month, I can get rid of 1 or 2 of those jobs. It wasn't until 2003. It took me 2003 when I went full time. The last time I took a paycheck from somebody was 2003. What's that? 23 years ago. And so that's when I felt confidence in it. So that's what, for example, our guys here, we coach them. Hey, start your career with a part-time aspect to it. Now, a lot of guys won't agree with it. And here's why we say part-time. Keep your full-time job, because your friends at your job might be a source of referrals for you. Right. But when you see clients for the first time and you're not sure you're going to go with it, and you meet them with a field trainer or a manager, you're putting the most important person in front first, logically speaking, which is a potential client that you're helping. Because you're not looking at them with like a car payment. You're not looking at them with commission breath. And people can smell that.
People can sense it.
Oh, for sure.
People can sense it.
And you're there with a manager that can smartly and artfully make sure you can back out of the conversation if it's not right.
Right.
That you're not hustling them into a deal.
What do you tell someone if they come to you and say, what should I invest my money in? I get this question all the time. I'm sure you get it every day. People are like, where should I invest my money? What's your framework?
Invest in ways that protect your income.
Okay.
Because your income is, you can create the best infinite banking, the great insurance plan, a great retirement plan, gets mortgage payout plan. But the moment your income gets cut and you're done, you lose control. All that stuff unwinds.
So you're a big fan of DI, disability income insurance?
With living benefits, yeah.
Okay. Yeah. So when you say protect your income, you want to life insurance with living benefits. Why don't you explain what living benefits is?
Yeah, well, living benefits is, heart attack, stroke, cancer. You can't perform 2 of the 6 activities of daily living, and you have a 90-day kind of like an elimination period to then start using the benefits. So when you have, so for example, if you have 90 days of savings, right? That's what the insurance companies will get you to spend down, or what you need to spend to get you through your situation before you ask the insurance company for a claim after date of diagnosis. So it's been very helpful when people have a change in health, right? Yep. And they can't go back to work. And back to my whole reason why you don't pay off a house, because we have many clients that had either forget dying, but they suffered a change in health and they couldn't go back to work. They couldn't get money to pay the mortgage, and next thing you know, they end up foreclosing on the house, or end up listing.
And guess who doesn't like to lend you money when you're out of a job?
The banks.
Yeah,
the banks.
they love lending money to people that don't need it.
Right.
They don't like lending money. Yeah, I have a whole chapter in my book about efficiency, and I use the house example, and it's interesting to me because the reason I'm a fan of not paying off your house is you look at risk. A lot of people say, well, because of risk, I want to pay off my house. I'm like, that is the most risky thing you can do, you know? And it's a lot of times it's just like really challenging the way that you think. I would rather have money than money in a home.
To that point of trading to try for paying off your house versus tax-deferred retirement savings, right? I interviewed Jinan Raman of the Federal Reserve Bank of Chicago. He was an economist there. Him, Clement Siam. So 3 economists got together, and they're all immigrants. One was from China, one was from Russia, one was from Sweden. All immigrants. And 2 of those 3 countries, a lot of them had ownership in nothing. So Jin and Ram said, listen, I'm from Russia. I was the former USSR. We couldn't own anything. I don't know why people are trying to rush to pay off their house. You should put that inside tax-deferred retirement. And he did all the algorithms and all the algebra inside his white paper. If you Google trade-off between mortgage prepayments and tax-deferred savings, I'm not gatekeeping nothing. Google it, find it yourself. He puts in there, Americans are making a $1.5 to $2 billion mistake by sending additional money to banks versus putting in their own retirement savings.
Wow. Okay, I would love to learn more about that.
For sure.
We'll get we'll either get that interview and put it in the show notes for those of you that are.
It was a radio show. This was 2000 now before podcasts.
we'll get a hard copy book, or we'll figure out a way for you to get that. All right, so I want to go back to insurance, and I've asked this a different way, but I'm going to just ask it more direct. If someone was like, Matt, give me the pitch around why life insurance,
a pitch,
and is permanent insurance for everybody?
No.
Talk to me about your framework on how you sell life insurance.
I mean, our framework in terms of selling life insurance. For me, it's more conversation. I mean, for example, today, if you look at term insurance versus permanent, why are people today trying to shove a pager when it's in a smartphone world? To tell them buy term and invest the difference.
Yeah, because a pager is a lot cheaper than a smartphone. But who do you know that has a pager?
Exactly, right? And guess what you still need once you get the page? You need a phone. And how many pay phones are around America today? And so, and when you're looking at the functionality of American family today, I mean, we insure our car. We insure you insure that car before you roll off the lot. You got to show them proof of insurance. Before you close in a property, before you get the keys to the house, you got to show them proof of insurance. And I asked the question: when you leave the house with your new baby, you got to show them proof of what? Car seat.
It's a car seat, yeah.
Isn't that crazy?
And it's terrifying too.
And you're the one. You're the asset. You are the asset, right? So if you're insuring all those assets, you don't see yourself as an asset, then that's the problem. That's the framework. Who do you see yourself economically? You're the financial engine behind all this. So if you insure everything else, you don't insure yourself, then it's just financial malpractice right there.
I agree. If we saw ourselves as money printing machines, which we are, if we're unemotional, if you had a machine in your basement that printed out money and it printed more and more and more, wouldn't you put as much insurance on that as you possibly could?
100%.
And so I find that
double down.
We should all like insurance. If sometimes we get emotional and we don't necessarily like insuring ourselves, maybe because it's rooted in selfishness. Yeah. But it's like insurance is a really amazing tool. How do you determine term versus permanent?
I mean, any temporary. Yeah, I mean, for example, when I was young and single, a ton of term insurance. Matter of fact, I got a bunch of term insurance still. So if I want a lot of life insurance right now for a temporary need, I want to get as much insurance as I can, and then have the potential to convert it to permanent. Mm-hmm. So right now, everybody, I mean, these insurance companies right now are daring us to buy life insurance. You see how inexpensive and cheap these insurance policies are. It's just crazy. I'm going around. I launched a third book. It's called Keep the Keys. I'm going around the country. I'm on my 15th city now. I'm going to my 16th one in Orlando next Thursday. And I ask people, who's in your 30s? Who's in your 30s? And if you could establish a tax-free $1 million deposit in case something happens to you, to your family, to your benefit, whoever, I don't care, your church, your charity, your family member, whoever, how much do you think that $1 million actually costs you on a monthly basis to do that, to have the capacity to do that? A bunch of 30-year-olds goes, I don't know, $1,000 a month? $500 a month? I mean, you're paying $500 a month. You would pay $500 a month to make sure somebody in your family receives $1 million from you, income tax-free. Yeah, I could see myself doing that, but I wouldn't do it because I don't have, some importance in doing that. But yeah, $500 a month. I said, would you do it for $75 a month? Oh yeah, all day long. You know what that's called? It's called term insurance. Why don't you get term insurance? Everybody has overpriced life insurance in their head. And then sadly, I'm thankful of your channel that you're explaining life insurance, because people think that, for example, we did a video on Charlie Kirk's split dollar, yep. $300,000 a year they're putting towards life insurance. That's not term insurance. That's permanent insurance. Mm-hmm. So the determination of term insurance, not permanent. Now permanent, can I take a chunk of money according to what's legal and ethical in the IRS code, whether it's split dollar, whether executive bonus, taking advantage of, just simple as IRS code 7702. Can I take advantage of maximum funding contracts according to the illustration guidelines in the software? And by the way, thank God for software. They won't have to mathematically do this ourselves.
Back in the day.
Oh my gosh, imagine doing that.
Rate book.
Having an abacus out in your client's house because they want to max fund a policy. But these things in terms of retirement supplementation, planning for some form of executive, some form of executive compensation to yourself. That's when permanent insurance comes in, which is conversation that most people who just focus on buy term invest never really explore.
So so you have the first part is protect and control.
Yes.
Everyone everyone should do that. It doesn't matter how much you make or how little you make, you should protect your number one asset. Check. Yeah. And then to determine if you want permanent insurance, it's mainly more of a retirement supplement. Yeah. And now we look at difference between Roths and 401ks and brokerage accounts. And the reason do you like life insurance is because of the tax-free cash flow potential on the back end.
It's funny that you mentioned that. My wife just asked me a DocuSign and document because we're taking some money out of our IUL to buy some property, just like 3 hours ago.
Wow.
Because we're taking advantage of opportunities today. Because in markets like right now, when the markets are tight, when everybody, if you go to realtor.com right now, you're going to find in many metropolitan areas, 20-30% of all the homes listed right now are price reducing. So we're taking an advantage. I just asked my mother, "Do you like being in that retirement community? You want us to buy you a home? But we got to have landscaping and plumbing and all this stuff, like just like normal home ownership again. Or do you want to stay in that retirement community?" I'm asking that question, but I have the capacity to do that. Yeah. So it's funny that you said it because just 3 hours ago, my wife asked me to DocuSign a loan that we're taking from our IUL.
But is that the conversation around like comparing it to other asset classes? Yes. And so it's retirement income supplement.
Yeah, and I'm talking about retirement supplement your Social Security, not necessarily your 401k.
Right.
Because sometimes people don't have a 401k.
Right.
Or people have a 401k, they don't get matched. And so if you're looking at a permanent policy, supplement your Social Security, an unmatched 401k. Or the match up to the match of your 401k, and then the difference. If you can, for example, if you can put 6% in your 401k, but they're only matching 3%, invest the difference. The other 3%, you put that inside your IUL or whole life policy, whatever is suitable and most appropriate for you.
Okay, so now we're gonna get into the weeds: IUL versus whole life, and majority of channels you'll just be like explaining this is how IUL works whole life. We don't actually have to do this here. We can go deep if you want.
Okay.
But talk to me, because it's my assumption, I could be off on this. It's my assumption that you guys are primarily do IUL through PHP and all, but I could be wrong. I know that you do have some whole life carriers.
It's because a lot of our guys are younger.
Okay. Talk to me about, because I'm a young guy and I primarily do whole life. They're both. What life insurance is a contract. It's a contract between you and an insurance company. There's no such thing as good or bad. Yeah. It's just how it's expressed. I'll explain why I'm pro whole life because you would think the younger you are, IULs have greater upside. I'm just curious, like why do you prefer IUL or do you not prefer IUL? I prefer
IUL. And by the way, our buddy Gigi, Gary Gunnason, and I'm not sharing anything that's private, but in our last podcast we had together a few years ago, I think it was 4 or 5 years ago. But even one of his own, not being banking, premium finance policy is not a whole life. It's an
IUL.
IUL.
Yep. Yep.
And so, I've got both. I mean, I've got a whole life, and I've got an IUL. And just like anything, is it Nike? Do you like Nike, like Under Armour? With whole life, at least there's that safety guarantees, and you don't have to worry about it. You don't have to do any in-depth annual review. You look at the dividend-paying history of all these insurance companies you just mentioned, Penn and
Mass, Guardian,
etc. I mean, they have long-term dividend-paying history. Yeah. Strong, it's dependable. It's going to be there. For me, maybe it's the entrepreneur in me. I like the upside potential of an IUL. Even though some years you can get a 0 or maybe even a 1. Mm-hmm. And if you're structuring it the right way in terms of maximum funding and dropping down the debt as much as you can, and making sure that the net cost of the insurance policy over a 20-year period is under 1%, you can get for example, my kids' policy, my two daughters' policy, who are 24 years old, they're twins, and one of their IULs, we just got their annual statement. Both their IULs earn over 9%. So you can get a higher than a 4 or 5 or 6 than a whole life. So that's the upside.
Right.
I'm talking about.
You say if structured properly in your field, and you see it, you review lots of policies. How many policies do you see structured properly?
Oh my gosh, it's sad.
It's
sad. It's sad. And the reason why I'm in the capacity I am in today is because people are getting recruited into the insurance industry, and then they're using ChatGPT, and ChatGPT don't know shit about IULs, and it violates all the compliance. I'm sorry, that was Christian French, but and they put the wrong message on TikTok or on social media, and if a compliance attorney was going to look at that, and it looks bad on all of us.
Yeah.
And that's why I'm in the capacity I'm at today, because I've got, bro, this is my 27th year now in the insurance business. Can't believe I'm saying that. I'm 52 years old today. I've been doing this since I was 20
You get into the wellness space. Be like, hey, look like. It's
right. The legacy space.
Yeah. Because you smoke cigars too.
100%.
How to look 35. And,
Well, that's the benefit of doing that. I know I'm sidetracking, but part of this, probably the Asian DNA.
Yeah.
But the other part of it is that I don't believe in the last 27 years of my life, I've been much under stress. I haven't been stressed. I asked for this life. Mm-hmm. I've asked for the pressure. Somebody asked you want to run 10 miles a day? You asked for that.
Right.
And you can back off a little bit at your pace, but you asked for that. So I asked for this life. I asked for upside potential, no doubt. My insurance career is like an index universal life policy.
yeah. Some years. But yeah, I think my challenge is you're totally right. When family offices, I know people very sophisticated that use whole life and IUL, and IUL actually gives you more flexibility. And from an estate planning standpoint, if it's structured properly, I think studies are pretty clear that it can give 1% to 2% more growth potential. Now, I have some friends that would argue with that, but I'll give IUL that. I really will. My challenge is I see so much. The most people don't last in our space, and I also see this thing. I see IULs at a higher potential of blowing up, and so I see that.
Just still got the universal life chassis in there.
Yes, universal life chassis. They're not changing the option A versus option B. They don't even know what that means, and policies are starting to eat themselves up. And so that is my challenge, is where these things are sold as amazing retirement supplements, upside, no downside, all these things.
Or an investment.
Which is a no-no. And welcome to TikTok. You're like, oh my goodness, I can't believe you're saying this. And yet, so that's my challenge, is like, I'm a really, really big fan of life insurance. We both probably have a ton of insurance, both term and permanent. My challenge is, I fundamentally don't look at life insurance as an investment. I see myself as an investment, my business and other things. Definitely. I just see it as a safer place to pool money, utilize. And so I don't want that extra quote unquote risk. Mm-hmm. And I could be, if we both are structuring them properly and maintaining them, the person with 1% or 2% more over 30 years, that's a big number. Yeah. So I think I'm acknowledging that, but whole life is harder to blow up. It's more dummy proof. Yeah. And so I want to get your thoughts on that. And the other question I have, and I would love for you to address, is we're in a space that's really misunderstood, has a lot of bad apples, some bad actors. And I always think of like Ned Brierson but you're in a space where you're in the network marketing space. And so I want to hear how you take that on, because you now take that stigma with an already insurance stigma, and I give you props for like being so consistent and growing, and you have and you're insuring families that would never get insurance through your system. So, but I know I'm throwing a lot of questions at you, but I wanted to just get you to riff on like some of the things that I mentioned.
The initial one, in terms of, sadly, a lot of guys don't last in the space. Thank goodness we have carriers that will allow us to take those orphaned accounts and to service them. Yep. And so then we can have annual reviews to go back and say, okay, well, this is the modification we need to make. And then, by the way, it's a great also agent retention tool from us, because, hey, by the way, your aunt, your uncle, so, you know, they want to review their policies, and they get another 4 or 5 conversations. Do you still have an active license? Right. And so it gives us an opportunity to loop back together with that agent and get in on the conversation, because, you know, life, you know, people are distracted with other things. And so so it's twofold. Number one, the most important aspect of dealing with those orphan accounts is the client itself. And then also the producer, the agent who may come back to the insurance industry, especially now with AI and all these different things coming back, they need, you know, to control their income, you know, much more urgently than in the past. And so, you know, so when we're looking at, I give you an example. I've got a policy, brother, 3 personal policies. I bought, you know, just like anything else you would sell, you got to own yourself. I own 2 IULs now, first generation IUL, bought in 2000, 2001. They're out of surrender charge period. So how this upside potential, downside risk, I've seen, guarantee on this policy, brother, is 3%. First generation IUL through the formerly known as Indianapolis Life, Ameris Life, Aviva, now Athene. I've been through iterations of insurance. I've been through 3 different CSO table iterations, right? When I came into the business, it was the 1990s CSO table, and then the 01 CSO table in 2017. So I've seen life insurance iterate so many different times in 27 years with my own personal reality. And for me, I've seen my index universal life over the last 27 years with that 1-2% difference, as you said. It's not that much different than a whole life policy, perform better than a whole life. Mm-hmm. But then again, from my perspective too as well, if I'm dealing with a client who's in their 40s and their 50s, and they only have a 20, 25-year outlook, whole life might be the better option.
Are you guys selling heavy on illustrated cash flows? Because that's another thing where I think IUL can get in trouble. We'll talk about Kyle Busch in a second. Yeah. But IULs look 10 times better when you look at the participating income, the income coming out. Yeah. And that's what I don't like in whole life or IUL, but I find that IUL, it's easier to manipulate, where you can show someone massive income or cash flow, and it's possible that policy doesn't perform nearly like that. Yeah,
you're 100% correct. And the flip side could be true too as well. It could perform better than it was illustrated. Yeah. But now with AGR, you know, they're making sure that you're more conservative with the illustration. You know, I've always said this, just like the Bible says, live by the sword, you die by the sword. Yeah. You live by selling by the rate of return. You live by selling by income cash flow. You're going to die by that.
So that's why you focus a lot on protection systems
to supplement,
control,
not replacement.
Yes.
To me, the biggest investment you can make, to your point, is investing in you getting involved in some form of business. Yeah. It's not going to be completely replaced by life insurance, or it could be potentially replaced by an annuity. It's another safe conversation, more predictable.
With the time we have left, I would love to get your thoughts on infinite banking. Yeah. How do you define infinite banking? And in your experience, when have you used it and when have you seen it be a disaster?
Yeah, I'm not, quite frankly, I've read the original Nelson Nash. If you're asking me today how much of a fan I am about infinite banking, personally, I'm all for it. But for the person that's not involved in our business, that's not doing it, that you really need to be educated on day to day, and then the conversation of you putting in money this month, and I saw a TikTok video, you put in 1 month, 30 days, later you can take it out. See, that's the problem with it. That's the problem with it.
Buying groceries, I've seen people buy grocery, and I'm just like, if an insurance company saw that, you'd be canned.
I mean, and people ask me, and I tell them, listen, if you want to touch their money, to Nelson Nash's point, you got to capitalize your policy. If you don't capitalize that policy for a minimum 5 years, don't put your money inside IUL or a whole life or infinite banking strategy. There's other strategies for you putting your money into, but you got to capitalize that policy and don't touch it and be disciplined to it. I think for you to do infinite banking, you have to be at the highest level of discipline to actually do it. Now, if you can just maximum fund the policy all day long, but if you're trying to capitalize this and maximum put all these different things and have the expectation, you're going to treat it like a checking account or a savings account. Yeah, you're gonna hurt yourself.
But with you just shared an example of like you're looking to take a policy loan as of today to potentially buy real estate. Yeah. Do you view that as infinite banking?
In a way.
Yeah. How do you define infinite banking?
Infinite banking is, because the whole thing about currency, you borrow at one rate, you can get the other, but instead of depending on somebody else, you're depending on you create your own bank, right? But in terms of the iteration of having access to it very frequently, I would say if you have to access it, the policy we just put money out today, I think we've touched it once 5 years ago. And it's been around for it's a 12-year-old policy with Nationwide. So it's been around it's a 12-year-old life insurance policy we bought in 2012, 2013. So this is the third time we're accessing it.
Yep.
And we probably want to access it again. And instead of paying an institution like a bank, we're now paying back the policy.
Yeah. So you think it can be overused? Obviously, I'm in a very similar boat. We have cash values. I don't use it for everyday purchases, but for bigger purchases, it could be. I see it as my opportunity fund. Yeah. And I'm only going to tap into it if the opportunity that I can go do is far greater than the cost. Because it's not free money. It's you're taking a loan against your cash value and your
I mean, I've bought cars from my IULs. I've done that. But instead of paying, Capital One, I'm paying back myself.
Right.
So I'd rather do that. At least that way I can walk into the dealership and negotiate the best price and walk off and have the strength of leverage.
Price.
That's right.
Yeah. Matt, as we wrap up, what other things are on your heart, on your mind, especially speaking to a group that cares a lot about insurance?
Yeah.
And a lot of people watching this are advisors, but some of them are just people that love the life insurance space, our clients, or love the whole idea of life insurance.
I'd say back to the IUL conversation, the whole Kyle Busch incident, the whole scam thing.
Yeah. Talk to me about your take on that.
I think so I read the whole complaint.
Yeah, so did I.
Right.
Yeah.
And so and then when I hear her get interviewed, I was at Inside Edition. When I'm hearing her talk to the reporter, that we want to leave it behind. We want to access it. It's been, teachers and veterans, and they want to use this for their retirement. And they can get scammed out of IUL. But when you actually read the document, it wasn't set up for retirement planning supplement. It was set up in an ILIT, an irrevocable keyword life insurance trust, which is used for mainly estate planning. The reason why it's irrevocable because you're not supposed to touch it. In other words, that would be revocable. But if it's inside an ILIT, an irrevocable life insurance trust, you're not supposed to touch it. It's made for estate planning purposes. And I wouldn't use an IUL for an irrevocable life insurance trust. So that's the wrong product and the wrong style. So there's two things there that's wrong.
Well, there were so many. There was malpractice. Like there was continue.
The agent and the oversight of the advisor. We're talking to all the insurance carriers we have here because they're all out here. The insurance company we're doing business with, they help sponsor this event for us. And they would never talk to a client on behalf of us because now they're putting themselves in the agent or advisor capacity in that lens versus just being a provider of a product.
Yep.
That's another aspect. And so, I can go on and I did a whole video about this, the whole cash flow breakdown, but this is prime time for all the Dave Ramsey, purists and, that company that's in America and
if they can screw a NASCAR driver, they can, and they call it a scam. And I find that the word scam is far overused because I'm like, listen. Yeah.
It's like calling somebody a racist today. It's played out. It's a played out term. And they just use it to trigger and to invoke negative emotion when it's not really what it is.
Right.
And so thank God I've had from myself, you can't tell IUL is a scam to the 122,000 clients we've acquired in the last 4 years, of which a good chunk of them have gotten living benefits up from it.
Do you know how much death benefit you guys have through your network?
In the multi-billions, bro. Multi-billions. Yeah.
I mean, we almost have 3 billion, and we don't have nearly as many clients as your network. So I'm sure
you have a calculator. So let's say it's 122,000 clients. Let's say a 90% placement rate, right?
Okay, so
122,000 times 90% for placement. Okay. Right? Oh. Times 90%.
Okay.
Times, let's say, a $250,000 death benefit. Yeah.
What is that? Is that 2.7?
27 billion.
27 billion.
Yeah.
The ripple effect that's going to have.
Oh, yeah. And more importantly, I believe today that the insurance industry is heavily undermanned. We need more good people entering this field. There's 100 million people in America in the multicultural middle income demographic alone that are underinsured or have no life insurance at all. And quite frankly, even if they were to get a term policy through one of these companies or whatever, I'm glad they have a policy than no policy.
That's right.
So therefore, they can eventually run across people like ourselves. They can say, okay, let me show you how to continue to add onto that. And
Are you a fan of someone getting their human life value, of like getting as much as they can possibly get?
Of course. Absolutely. That's why I'm getting a policy right
need
now.
Versus want kind of deal. It's like you technically don't need anything, but wouldn't you want the best thing?
That's
for
what
your
wealthy families do.
Yeah.
That's what the Vanderbilts, the Vanders should have done. That's what the Rockefellers do. That's what the Kennedys do. So that's why I say anybody, if you get involved in the insurance business, any baby that's 9 days old to 90 days old is an adult, healthy human being, is the potential your customer.
Yeah.
And we have 100 million people in America underinsured, lacking this conversation. And because our industry has done a poor job of attracting guys like me and you to this field, multicultural, young to the field. I would say this, it is a very, very sexy industry. When you can work together for me, I work together with my spouse. I work together with my family. I work together. I believe that the insurance space, I just said this last time to my guys, I believe the insurance space, it's a God kind of career. Because the spiritual battle, I see it across the kitchen table. I see it in the boardroom. I see it in family conversations. The spiritual battle of good and evil, of jealousy, of rage, of have and have not, all around the conversation. When agents are properly trained, they see themselves potentially in that capacity as a purpose-driven type of agent. Come in there and push back the gates of the enemy, and invoke biblical principles potentially. If that's how you work, because I believe that there's a stewardship responsibility between what we do to take advantage of every tool on earth to our advantage. And insurance, what a great tool for this to be invoked into every family conversation and every financial conversation.
I had someone tell me if Jesus is alive today, he'd be doing life insurance as a part-time job, because he was a carpenter.
Because he needs extra cash, and home building right now is tough.
Last question: if this was your last day on earth and you're with the people that you love the most, and you couldn't give them any podcast, book, nothing but a conversation, what would you say and why? Matthew
6:33, seek ye first the kingdom of God, and all these things shall be added unto you. Love God, put him first and foremost in your life. Second one, always maintain control, right? Control what you control, leave everything up to God. And number 3, be clear about what you want to be known for. In this case, being bold enough to stand for something, because a man that stands for something can't be the person that falls for anything. So those are the 3 things I would tell him.
Matt, thank you so much for taking time.
Honored to be here, brother.
I really appreciate at your event you taking time to sit down with our audience.
Yeah, thanks for reaching out. I'm so glad that we can make things, because you're here in Nashville. We came up in Nashville. We made it happen.
We've helped people unlock millions of dollars in hidden value just by reviewing their old life insurance policies. Unfortunately, thousands of people do not have life insurance policies set up properly, which could be costing them a lot of money. If you have a policy, the few minutes it takes to fill out our form could be the difference between continuing to waste money or unlocking serious value. If you qualify, we'll review your policy 100% for free and give you the honest breakdown you deserve. Click the link in the description or take comment below to apply.